the classic Mike Tyson quote is, everybody's got a plan until they get punched in the mouth. I like that quote a lot for mining, because everybody likes mining on a spreadsheet, but then you go get out in the real world and you go move physical space around to deal with electricity, and boy, that's a lot different than a spreadsheet. So there's a bit of mining amnesia, and then that has led, in my opinion, to mining centralization problems. All these problems that we're quite worried about, and I'm going to touch on this in a minute, are downstream of the fact that we are acquiring the majority of our Bitcoin by buying it instead of mining it. So why? Why did this happen to us? So I would like to have a deeper conversation with Bitcoin historians to see exactly why, but I came up with a few reasons why I think this happened. One, convenience, right? It's just easier to buy than mine. I mean, let's be honest with ourselves, and we're human. We do like convenience, so it's normal that sometimes we don't take the hardest route in life. So out of convenience, we've gone to exchanges to buy. Two, I think there's a mining community failure. And I say that because most people, including when I was starting SAS mining, I had a lot of people saying, why don't you just mine it for yourself? And I think that attitude of, I want to mine just for myself, while it's great to be self-interested, I think that there was a failure in the mining community for anybody to develop an accessible way for the masses to mine. And that's made it difficult to compete with exchange-based acquisition. Third, supply and demand. If you were in a hurry and you want to get a lot of Bitcoin, it's much easier to buy it than mine it, right? You're going to get Bitcoin over time when you mine, but if you want a big block, you kind of need to buy it. So there's a supply and demand issue there. And fourth, there is a misalignment of incentives between exchanges and mining, right? At their core, the exchanges make money they take a cut of the fiat to Bitcoin transaction. That's how they make their profits. That's how they drive their businesses. That is not in alignment with pushing your people to mine, right? So there is a disincentive from the exchange businesses to push people into mining, right? And I think that's a very subtle point. I'm not sure if it's even conscious, but there is a core misalignment there. So let's talk about the mining centralization problems, just to address the elephant in the room. And this is the area, now that I've given the context, on which we see a lot of our community focused, right? The major issue is, again, back to acquisition. The intention for most of the hash rate on the network, hash rate being the computational power that secures the decentralized ledger that we call Bitcoin, is there to acquire fiat, not Bitcoin. And it's using Bitcoin as a proxy to do so. Now, I say that with full faith and confidence because I know if you are a publicly traded Bitcoin mining company, you have a fiduciary responsibility to return dollars to your investors. By definition, you are there to mine Bitcoin, but ultimately return dollars to your investors. You have a legal obligation to that. And that's a good chunk, if not the majority, of the hash rate on the network. And I can tell you from going to many Bitcoin mining conferences, the majority of people in that room are also there. Hello. Okay, we're back. So let me put a couple of data points to drive this home. If you look at, and I took these numbers just 2 days ago, if you look at the combination of hash rate that is being aggregated by Foundry and AntPool, you will see that it's 47%. So the theoretical limit at which you can attack the Bitcoin network is 51%. This is a scary number, folks. This suggests that if Foundry and AntPool were to come together, they could very likely force a double spend and erode faith and confidence in the Bitcoin blockchain. This is a problem that we need to address. The second one is 65% of all the Bitcoin mining hardware is being manufactured by Bitmain. Bitmain is Bitmain is a Chinese-based corporation. That means if the CCP wanted to come along, they have one throat to choke to be able to bend the hardware manufacturer to their will. Do they want to? I have no idea. But the fact that this even exists as an incentive means we've got a problem. Now, to be fair, there are solutions on the horizon to both of these. Ocean demand is not in the market yet, but there's 2 mining pools that are working to decentralize the hash rate, which is super important. There are manufacturers coming online right now, and Bitmain's share of the market has dropped from 82% to 65%. So these problems are being worked on. So it's not all, dire consequences here. But the real solution to this is Bitcoiners must mine. Quite simply, we've ceded the network to fiat hashers, and we need to take it back. There's only one way to do that, and that's to get involved. And I'm going to give 3 compelling reasons why we should be doing it. First, I'm going to scratch your self-interest and say it's more economic to mine than buy. 2, I'm going to talk to you about the moral obligation, which actually I've spent a good chunk of time already kind of infusing throughout the conversation here. And third, I believe there's a market-driven reason why you're going to get to mine. So here's the economic case. The economic case, and I'm stripping everything away and making this as simple as possible, which is how much does it cost to run my mining rig and how many sats does it produce? You divide those 2 numbers and you get a price per Bitcoin at which you're acquiring your Bitcoin. That's the daily cost to mine a Bitcoin. To be fair, I have not included the mining rig in this calculation, and that's intentional. The reason why that's intentional is because it confuses the heck out of most of us. And the reason why it confuses the heck out of most of us is the price of your mining rig really depends on the timing of the cycle that we're in, and it becomes horribly complicated very quick. So you need to buy a mining rig to get started. At the end of your mining journey, you can sell your mining rig. The price point at which you get on the ride and off the ride vary wildly depending on your timing in the market. So it's a complex part of the equation, and that's why I'm just making it simple, because what I've discovered is talking to many Bitcoiners, they're not aware of this. They're simply not aware that the daily cost to mine a Bitcoin, and this is the opportunity with SAS Mining right now in Paraguay for an air-cooled mining rig, is 50% off what it would cost them to go to an exchange and buy it. So there's the market-based reason. And I want to talk a little bit more about it, because there's a super simple idea that I am ashamed to admit I didn't recognize until about a year ago. And this is going to sound silly, but Bitcoin mining is the only way to make new Bitcoin. Let me say that again. Bitcoin mining is the only way to make new Bitcoin. Why is that important? Well, it's important because it breaks the paradigm as a Bitcoiner of how we evaluate investments. So again, 0 to 1 innovation. We put dollars into an investment, we expect dollars out. The problem is if you're a Bitcoiner, that's not what you're saving in. You're saving in Bitcoin. So it makes 0 sense to think of it in terms of ROI, a mining investment. It makes all the sense in the world to say, am I getting more sats for my dollar? Which means you need to be comparing to the price on an exchange. Am I getting those sats cheaper by mining than buying? That's the real question we should be asking ourselves as Bitcoiners focused on saving Bitcoin for our futures. 2, there's another advantage, and this is actually the one that gets most of us more excited these days, given what we see in the world. But you get wild sats when you mine. These are Bitcoin that are generated directly off the network. You're going around the entire surveillance state banking system. I don't know, just quick show of hands, who's walked into a room, not noticed a camera was sitting over there, and then as soon as they noticed that there was a camera observing them, they suddenly kind of froze up? Does that happen to anybody? All right, I'm seeing heads nod, if not hands coming up. So yeah, that's what happens to our sats, guys. Our sats, when we buy them off of an exchange, and I see this because I see how my customers are using their sats. When you buy your sats from an exchange, I like to call them surveillance sats, because they sit in your wallet and there's just this psychological friction of, can I really use this? Do I want to send 20 bucks to my buddy in Australia to help him and his wife out and for a baby gift or something? Or I don't know, there's a taxable event there and all sorts of stuff, right? So there's just that friction. And so I see wild sats as being important to help us with the circular economy. Finally, and I think, again, this is something that are we good? I'm still here. All right. Thumbs up. So if you get more sats for your dollar, you're able to shorten the time at which you break away from fiat dependency. And I think that that's super important. So I think you got an economic and moral obligation to your families to get more sats. So this is the economic case, and I guess I threw in a little morality there at the end. But the moral case, there is no more active Bitcoiner than a Bitcoiner acquiring their Bitcoin through mining. You become skin in the game social layer. That is very different than buying Bitcoin on an exchange and holding it and lacking that participation. When you're a miner, you start watching things like hash rate, network difficulty, block times, all these things just naturally happen. You come viscerally in contact with the network. And that's important because with that comes a focus on decentralization issues, and we will naturally purge those out of the ecosystem by aligning our incentives. Thirdly, you may have heard of the op return debate. The op return debate sort of has fired up the community. We now see Bitcoin Core has lost a lot of support, and there's been some reputational damage. We've seen the uptick of knots as the primary implementation. I'm not going to get into that argument, but I will point out the entire argument comes from mining centralization issues. The fear at core was that mining and how the push through of op return was justified was around mining centralization fears. That's how it was justified. So had we been acquiring our Bitcoin through mining, those fears would not have come to pass because they wouldn't have existed, because we wouldn't have allowed the centralizing forces to come into play in the first place. So we're going to reunify the community by taking back the network.